The very own Danny Kessler, my partner in crime, talking about the new wave of disruption in the world of finance. So we're joined by Sopnendu, the Chief Fintech Officer of the Monetary Authority of Singapore, Richard Teng, the CEO of Abu Dhabi Global Markets, and Leslie Goh from the World Bank. Over to you, Danny.
Thank you.
Talk. Very good. Good to see you. Leslie.
Welcome and good afternoon. Wow, look at all of you. Please, gentlemen, take your seats. And Leslie, thank you. Well, firstly, a big thank you to all of you, the audience, from everyone at Unbound, because you make this event. So I think we should start with a big round of applause for yourselves for being here. Thank you. So I have a panel here who needs no further introduction, a very esteemed panel of thought leaders. And I think as we only have half an hour, we're going to dive straight into the questions. And I think let's just start at a general macro level, and maybe I can start with you, Richard, as to what do you see as the key disruptive themes in financial services over the next few years, where the hype is actually translating into reality?
I do think that over the course of last 2 weeks, I think what's hogging the conversation is the introduction of Libra by Facebook. So one of the key themes that we probably will see is the use of blockchain-enabled digital assets to bring about instantaneous remittance, instantaneous cross-border payments. Another big theme will be the API economy. And the third one will be artificial intelligence, right? So those are the few key themes that I see will really make a transformational change for financial services going forward.
Thank you. And Sopnendu, what would you...
I think my view has been that while the technology will disrupt what they need to disrupt, but the biggest shift will come from what we call as a foundational infrastructure, which will define financial services, which will redefine logistics, will redefine health services, things like the global stacks, identity, payment, API gateways, trusted data. These are the big foundational infrastructure which will start bringing the narrative in a complete different context. I think that will change the way we behave, conduct ourselves, the way we interact with the services. My best way to define, I think we'll soon forget financial service as a term. It'll be part of a much broader integrated service. And that will shift the whole dialogue.
Very interesting. And Leslie, from a World Bank perspective, what will your views be based on those themes which you're hearing there?
So thank you very much, and what an honor to be here among esteemed panelists. So the focus of the World Bank is to end extreme poverty and increase shared prosperity. And that means we're reaching out to people who are unbanked and underbanked around the world. That's 1.7 billion people out there. And many of them do not have the data literacy or financial literacy. They may have concept of a phone, may not be a smartphone, could be a feature phone. And in these remote places, they may not even have connectivity. So to talk about using some of the advanced technology, it's a world apart from where they live currently today. So how do you democratize and make accessible technology usable to them and that matters to their life? So from my perspective, it is not just about providing a financial services, but creating that resiliency for them to lift themselves out of poverty and to create active usage that matters to their life. So it's not so much of the technology itself, but how do you solve these problems for the people who are fundamentally stuck in the first gear, so to speak, and how do you unlock that potential in these countries? So there are many different ways to look about. As a technologist, I'm excited, of course, about AI, blockchain, Internet of Things, and so on. But in order to reach these people, it's the last mile that matters, and then be able to drive active usage, not just opening a bank account or opening a mobile wallet. How do you change behavior fundamentally? Which is a lot harder than just a technology. It is a lot to do with the whole enabling environment and building trust. Like what he was saying, Sopnendu knows very well how do we really talk about technology at each layer to build trust.
Thank you. And maybe, Leslie, I can come back to you, and maybe you can share your own inspiring story, which I heard a little about yesterday, and how you think when the World Bank does deploy some of this disruptive technology, what that will look like and what that will translate into for those in extreme poverty and the underbanked, etc.
I think we have to look at it with an empathy, right? Designing solutions with empathy is important because it's not just about our concern, it's about the people that you're serving or the small, medium enterprises in these remote places. How do you really use these tools? They have nothing but tools to them. How do you make a difference in their lives and help them get themselves out of poverty and change the mindset? And so that requires going to meet them where they are and be able to design something that matters to them in order to change the behavior. So it's a lot about the design thinking with empathy. And it's a lot about trying to make sure that these solutions are tailored for their needs, contextualized to the region and the country that they live in. So we operate in, we have 189 members around the world, and we operate in many of the countries locally. So we think globally, but implement locally in country.
Thank you. Sopnendu and Richard, what do you think the regulator's role is in fostering innovation in the financial sector in order to better manage risks, enhance efficiency, and strengthen competitiveness in the financial sector?
I think given the financial sector is highly regulated, there is a role for a regulator to play the way we shape the destiny of the sector. Historically, regulators were not viewed as a part of the shift. But last 2-3 years, regulators are playing a very dominant, at least a role in side by side of the industry while they're shifting this whole innovation agenda for the sector. There are reasons why we do it. First thing, I think with the highly interconnected, highly digital world, the consumer demand has shifted. There's no point regulating an industry which the consumers don't want. So we got to find a way to make it more relevant to the sector. I think we start from the whole premise, it's for greater good of people. I think that's the starting point of our thinking. If you look at last 4 years, what MAS has done, and I think what he will talk about what ADGM has done, look at the infrastructure we have started putting together. Great example in Singapore. We put an infrastructure called Pay Now with the industry with this objective of making payments simple. 3 clicks, 0 cost, instant transfer. Very fintech-like thinking, where you focus on consumer experience, build a great technology experience, ensure there's a safety net, proper regulations are in place to support this shift. Recently, we put together a payment service bill. It is an interesting shift, the way we construct regulation. It is now an activity-based. We have broken down the whole payment service bill into small chunks of activity and appropriately applying the regulation, almost like you're responding to a technology shift. So both the regulatory policy making, our incentive to build public infrastructure which are efficient, and encouraging the industry to come in is a role which regulators are going to play in this whole space. If you look at the history of technology adoption, somehow financial sector, because what they do is quite inherent to them, they have shifted the narrative big time. I'll take the example in India. The big Aadhaar, which is the 1.5 billion identity system, has shifted the whole financial sector, way they operate their whole business model going forward. Right in Singapore, we have SingPass, the My Info infrastructure. It is redefining the way we are thinking about financial sector. Same is true for many countries in Asia, which is building national infrastructure, primarily driven by the public policymaker. So just to summarize, I think there are 3 big roles regulators will play. They will start building large national public infrastructure, which will reshape the future of financial services. They're going to do more experiments. They're going to be indulging in a lot of these experiments with the industry. And one thing we talk about is the whole sandbox culture. I think historically, policymakers are behind this experiment process. They wait things to happen and they make changes, but now that's not the case. Because we believe if policymakers steps back and start making policy after technology mature, most likely technology becomes legacy and our policy becomes legacy. So we are now experimenting together, fine-tuning our policy to respond. And the last phase will constantly focus on consumer need. It has to be relevant to the people we serve. If you don't do that, regulation is a moot point.
Absolutely. Thank you for that. And Richard, how would you...
I'm just going to add to what Sopnendu has just said. I think I absolutely agree. But going forward, my view is that the good regulators, particularly, will need...
You're referring to MAS?
Yeah, of course. And MAS and ADGM. will need to play a more active and more interventionist role. Good regulators can no longer afford to be technology agnostic, because if you look at it, regulators nowadays need to be enabler and facilitators, right? And so more and more, you're going to see a lot of changes in that shift. 5 to 6 years ago, regulators are trying to learn and way behind the curve, so to say. But today and going forward, we need to act very different. In fact, we need to be more like technology companies in many sense. So if you look at the Apples of the world, the Netflix of the world, computer gaming company like Electronic Art, they do share certain characteristics that we can learn from and financial firms can learn from. One, they create new ways of consumption, they create new marketplace. Two, they invest quite heavily in research and development, right? And third, they try to deploy technology advances before the rest to gain competitive advantage, right? So if you can relate back to what regulators should do going forward, firstly, by facilitating, by supporting and enabling, you create new marketplace. Be it in the market of blockchains, be it in the market of API economy. Those are big markets, and those will not really take off on its own without regulatory intervention, without new rules, new framework, and we can no longer try to force-feed some of this new technology into existing regulatory framework, right? Secondly, I think most regulators, other than a few of us, I think, have not devoted enough resources into R&D. If you look across the regulatory agencies, how many of them have really devoted a lot of time and energy into the new wave of the future, understanding the risks, how do you regulate them properly? I suspect it's very little in terms of, and it's not really the regulators' fault. Sometimes the policymakers' fault, not giving the regulators enough resources on those fronts. And the third is how do you deploy technology, both for ourselves in the regulatory technology space, to monitor traceability of cryptos, for instance. How cool is it if you think of the future, if regulators like ourselves can come up with an app store, like Apple, where you can download eKYC, AML compliance, how do you make sure that money are properly custodized, and clients' money are properly accounted for. Recently, Singapore has an episode where there's a lawyer that absconded with $33 million that's supposed to be in an escrow account. If you use, for example, blockchain technology and trace that properly in the future, you might be able to avoid some of those episodes. So think about some of the problem statements and how can we solve that with the industry going forward.
Just to quickly add, one thing regulators will also do, make the systems interoperable. If we have seen enough market evidence where regulators stayed back, it created huge monolithic, very strong monopolies which are not talking to each other, which is great to start with. Consumer get a lot of benefit from this company building hugely concentrated ecosystem. In the long run, they will not talk to each other. The role regulators will play will force some interoperability between these large platforms. I think that's a good thing for industry if regulators get into this space.
That's interesting. And maybe just picking up on an earlier thing you mentioned, Richard, on the crypto space, where you have the opportunity to maybe help develop that market in its nascence, as opposed to, as you say, when there are these large monopolies. You know, ADGM has come up with a very attractive proposition in the crypto space. Maybe you could explain your vision for that, kind of learning from, as Sopnendu says there, you know, from the mistakes of the past with monopolies, etc.
Well, the way we tackle the crypto space is coming up with a problem statements. Right? We see the price volatility in that space. We see a lot of risk in that space. And we say that, look, if you want to grow that space properly, how do you do it? By starting to talk to institutional investors, because they are not participating in a big way, right? Why is that? Risk of AML, KYC is not properly addressed. Custody risks are not properly addressed. Last year, you have $1 billion worth of coins being lost or stolen. That doesn't instill confidence in the sector. Technology governance risk, investor protection risk, market operation risk. So these are the key risks that we address. Ours is an extremely high watermark if you look at the world of cryptos. I'm not quite sure how many of you own cryptos here. Can I have a show of hands?
Show of hands.
Show of hands. Great. So you dealing with cryptos, you know the risk. You have your own private key. That is probably when first crypto was just invented. You know, how do I store those in a thumb drive? But if you think of institutional-grade cryptos going forward, would that still be the mode of storage? May not be the case. You probably need a much safer way of storing it. Can you imagine if you lose your banking password today, you have no access to the money in the bank? You'll freak out, right? So why is that happening in the crypto space, for instance? Right? So once we start thinking of all those issues and working with the institutional investors to make sure that they are keen to participate, otherwise you will continue to see the price volatility when it's just a retail and high net worth individual market. You need the instis to come in. That's why we have built a marketplace to address all these risks so that institutionals will be interested. And you're going to see much greater stability in this marketplace, I do believe.
Right, that's very interesting. Maybe I can kind of zoom back out again and come to you, Leslie. You obviously look at things from very much at the World Bank from a global perspective. And I'm just wondering if you could share some of the insights as you can see the bridges between regions and how innovation is making that happen, and some of the insights you can maybe share with us in that perspective.
So I spend a lot of time in Asia, partly because I was born in Singapore. So there's a lot of affinity in terms of understanding what matters most in this part of the world. And also from a fintech and technology innovation perspective, this is the region that is booming and adopting new technology in leaps and bounds. The phenomenon is mind-boggling, and this will go down in history as one of the most interesting time on the technology cycle. So from that perspective, I am very personal as well as on the corporate side, very interested in what's happening here. And can we take what works in this region and encapsulate some of the great learnings, what works and what doesn't work, and bring it to other regions, like, for example, Middle East, North Africa, where I spend a lot of time, or the rest of Sub-Saharan Africa and Latin America. So our goal is to try to take some of these great ideas and then try to proliferate that and help the other regions with cross-learning experience. Because after all, World Bank is a knowledge bank. We just celebrate our 75th anniversary since the Bretton Woods conference that started this whole organization of a multilateral development institution. So we hope that this cross-learning will help cross-pollinate and also help the regulators and policymakers build capacity around what is blockchain, what is artificial intelligence, and some of the leading trends, and also help them regulate proportionally to foster innovation while managing risk on their side, which is the role of the regulators. Because I think it's important, right? Unless they understand it, they won't know what to do with it, so they default to the position of not doing anything, which is a very stifling environment. So we hope that our aspiration is to help regulators around the world have a common understanding and be more like MAS, if possible, to take some of the great learnings from MAS and spread it out to different parts of the world. It is a daunting task, but I think it's necessary, and this is a position that the World Bank's convening power can bring forth the cross-regions experience.
Excellent. I mean, maybe I could turn back to both of you on that theme. And Richard Sopnendu, how can Singapore and Abu Dhabi work closer together? And what are your views on East meeting West with this politically sensitive time, with conversations happening about the splinter net? And what are your views generally on that?
Should I go? Yeah.
Yes, please.
I think
what Singaporean also for sitting there.
I think what Leslie
there.
mentioned is quite important, because there is a need for local content, local knowledge, local expertise. So if you look at this region, Southeast Asia, you look at what Grab and Gojek has done, right? Beating off the competition of Uber, etc. I think that shows the importance of local knowledge and content. Between Abu Dhabi Global Market and MAS, there's a lot of collaboration. Our first fintech bridge is with the Monetary Authority of Singapore. During our first fintech summit, the two winners were showcased at the Singapore Fintech Summit, and they went on to win prizes. But myself and Sopnendu, we have been talking about collaboration on many fronts. Last year at the Singapore Fintech Festival, for instance, we showcased a trade finance platform using blockchain that allow for proper facilitation of documentation and finance between Middle East and Asia. And that's really connecting the two continents together. And we are looking at how to connect the API economy as well, which is extremely important. So you have a bigger marketplace for financial institutions, for fintech innovators to come together with regulatory participation and supervision. I think that will be a powerful statement. Right? Of course, we are also members of the Global Financial Innovation Network, really supporting fintech agenda globally. So there are a lot of collaborations between the two of us. Yeah.
Thank you.
I think if I have to expand, let's give a more tangible example. Unprecedented, I think it never happened for Singapore. We're in Africa next month. 52 plus African countries coming together in Nairobi in partnership with Central Bank of Kenya and Monetary Authority of Singapore. 2.5 days, we are building a East plus West complete big narrative about financial services. We call it Fintech in Savannah. Okay? So it is unusual for a central bank to step out of the jurisdiction, be in Africa, spend 2.5 days, bring the global narrative together because we believe financial service will work the most efficient way when they're connected. Similar standards, similar expectation, similar synergies in the way we move things. So already that trend is out there. There's much deeper collaboration in the whole space. Again, coming back to my global stack discussion, if at least the financial sector regulators will go ahead of other sector when it comes to collaboration, because that is inherent to our nature. AML, KYC, money laundering checks are part of our business. And if we are not connected, if we don't collaborate in our system, processes, design, we have a bigger problem to deal with. And now on top of that, we are talking of climate change. We're looking at sustainable assets. We need much more connectivity into our systems, processes to tackle the other new issues we are dealing on the climate side. So much bigger collaboration, much to hear. In a month's time, much bigger news is coming there.
Well, thank you for communicating such a positive vision. We like that. I'm conscious of time, and maybe just a couple of minutes each, if you wouldn't mind, on what you find is most exciting to you in your space now. Maybe, Leslie, I can start with you with that.
Well, I'm a technologist, so I geek out on a lot of the new areas in the sandbox environment and try things out. And for me, the intersection of technology, different technology, for example, artificial intelligence and Internet of Things in the area of agriculture, agri-tech, is a very interesting space, because if you really wanted to tackle climate problem and issues around sustainable green finance, there are fundamental things that you perhaps need to look into the soil and understand the carbon emission of soil. The whole new technology around smart agriculture is a fascinating space. And I cannot say that I'm an expert in it, but I'm still researching into it. It's a very cool area of looking into this space with the lens of where technology like Lego blocks could help address green finance and climate change issues. There are quite a lot that's been published out there. And then perhaps even layering on top of that, the geospatial imaging to help us understand precision farming better over time with eyes in the sky and foot on the ground because of the insight that you can gather from these intelligence and augmented analytics. So I think these kind of cross-industry and cross-technology, bringing together the solution as a Lego blocks to help solve these problems in emerging country is, to me, one of the most empowering things to try to address extreme poverty and also the sustainability development goals that's set up by United Nations. But I also fundamentally at a core, I also believe in gender balance. And for me, this is an important part. And my message out to the folks who are out there, one is to focus on, to try to get more girls and women into STEM education and build that career path towards technology and technical skill set so that they can be part of the digital economy. As we see it today, there's a significant lack of people who are well-suited, well-skilled in this space, and gender balance to have a seat at the table to build towards that leadership position. So I'm hoping that my outcries and outreach to women and less represented folks out there to step up and come forward in this space. And we are hoping that the men around us will be supportive to bring forward that gender balance and diversity of skill set and inclusion. So that's my wish and my hope for this community.
Girl power, we like that.
Thank you.
Thanks for that empowering message. Maybe if I could turn to you.
Given he has told everything we want to do together, let me add a couple of more. I think the biggest bet, what will happen, in my personal bet, is the whole unbundling of the back-end systems, which supports most sector. I call it B2B unbundling. You will see large single entity system breaking down to very small B2B systems that will significantly re-architect the way systems and processes are designed. It will attract a complete new economy which will thrive on this shift. From a business point of view, the most attractive and the most valuable time I'm going to spend personally with the climate change sustainability. That is single-handedly going to redefine technology, processes, people's behavior, and the whole, it'll shift the narrative from hoarding wealth and more distributed wealth and more sustainable wealth.
I like that. We're solving a lot of world problems.
And by the time, if I do little PR, this time the Singapore Fintech Festival, 30% of our content will be dedicated to climate change.
Right, excellent.
So I think both Leslie and Sopnendu have touched on very broad themes, right? I wouldn't go there. I would just go on very micro themes. I think two things. One is very exciting in this era that regulators can work alongside very closely with fintech and fintech innovators through things like regulatory sandbox, digital sandbox, API. I think that gives us a different dimension of work. The second thing is really tech for good. If you look at where I'm currently working, I'm from Singapore, I'm working in Middle East, and you have a prevalence of foreign labor in that country, right? And for the lowest of the blue collars worker, so if you look at the construction worker in that country, their income is so little that the banks wouldn't want to bank them, right? And they keep money under their pillow, it's not safe. When they do remittance back home, and they have to do it on a monthly basis because back home need those money, those costs is 20 to 30% of whatever they wish to remit. So it's huge, it's exponential, it cuts into sizable part of what they are earning, right? So when you see things like fintech, being able to transform that, make their life better, being able to bring about greater financial inclusion, which is a theme that Leslie has already mentioned, I think that is heartening when you see those things. It makes a real difference to the life of people, and that's what we are about.
Well, thank you. Well, unfortunately, we've run out of time, but I just want to thank all of you for what have been fascinating insights, and please join me in applauding you. Thank you.
Thank you very much, Danny and his panel. Thank you.